Hello and welcome to Capital Market Live on Channels Television. I'm Will Ibang. First, let's check in on the markets. We begin in Europe, where stocks fell on Friday after a hotter than expected U.S. inflation print and hawkish remarks from a Federal Reserve official prompted expectation of more aggressive interest rate hikes. The UK's FTSE 100 fell 0.15% on Friday, and France's CAC 40 closed 1.27% lower, while the German DAX dropped by 0.42%. Earnings reports continue to drive individual share movement in Europe. And now shares in Asia Pacific declined on Friday as investors in the region reacted to the Thursday release of a hotter than expected U.S. consumer inflation report that pushed the 10-year Treasury yield past 2%. Mainland Chinese stocks closed lower, with the Shanghai Composite falling 0.66% lower. Hong Kong's Hang Seng Index declined 0.07% as of its final hour of trading. Meanwhile, markets in Japan was closed on Friday for a holiday. Now to the U.S., where stocks slid on Friday as increased tensions between Ukraine and Russia sent oil spiking and led investors to dump risky assets like equities. The tech-heavy Nasdaq Composite fell 2.78%, the S&P 500 dropped 1.9%, while the Dow Jones Industrial Average tumbled 1.43%. Back home at the domestic equities market, the 5-week bullish run came to a halt this week as investors took profits of dividend-paying stocks. The local bourse recorded losses in 3 of the 5 trading sessions of the week, following profit-taking in the shares of Okomo Oil, Bua Foods, GTCO, Seplat Energies, and MTN Nigeria. Consequently, the all-share index shed 0.2% week-on-week. Activity levels were mixed as volume traded declined by 25.4% week-on-week, while value traded rose by 15.4% week-on-week. Performance across sectors was broadly positive as all key indexes closed in the green. Now, Score Nigeria topped the gainers chart for the week, while Farmadeco PLC led the laggards. The 3 of Access Bank, GTCO, and Fidelity Bank contributed 23.8% and 19.1% of the total equity turnover volume and value in the week. Meanwhile, the NASD OTC Securities Exchange Index closed the week on a positive note. The NASD Securities Index increased by 1.27% to close the week at 751.43 points. Volume of trades for the week increased by about 35% to 2.63 million units when compared to the previous week, while value saw a 295% jump to about 200 million naira. Priceline Campina Wamco Nigeria topped the gainers chart, advancing by 14.41% to close at 125 naira for the week, while NASD PLC led the underperformers. Meanwhile, Priceline Campina Wamco Nigeria and NASD PLC top trades by volume to close the week. Now to the fixed income market, where the bond space was mixed, with the market having a ping-pong movement this week. However, the market closed mixed. Overall, average yields closed at 11.51%, deepened by 0.26%. The Nigerian Treasury bills market was quiet for most of the session this week, with average yields remaining unchanged. At the close of trading, the market was bullish, with buying interest seen for both the Treasury bills and OMO bills. Average yield for Treasury bills fell by 2.2%, while yields on OMO bills also dipped by 0.18%. Now joining me on the show to talk about the markets is Mr. Kofi Garba, Chief Executive Officer at APT Securities Limited. Thank you so much, sir, for coming on the program.
I'm happy to be with you.
You've seen the report for the week. The markets closed negative as well, with positive sentiments were trailing the activities in the week, but surprised to see that the market will close negative as against positive as investors will, but we see profit-taking going on in the markets. But what is driving, what factors are probably responsible for this downtrend we've just seen now? And is it going to be what we will see next week?
Well, if you look at the number of the stock that gain against those that have lost, it shows you more gainers than losers. But we have a market where we can see to some extent it's lopsided. Lopsided in the sense that by the time premium index lost, you see all share index lost. What led to this loss is because the premium index lost 0.15%. And who are the premium index? When you look at the MTN, when you look at the BUA, when you look at the Airtel did not lose, but the BUA, the MTN, the JETCO, that is the holding company of GT, they all lost, and these contributed to the heavy loss, not because more company lost than Guinness. If you look at it throughout the week, I think by Friday, 19 gained against about 8 lost. And if you look at it by even Thursday, about 30 company gain. So there is more gainers than losers, but we have heavy weight. Whenever they lost, the index lost. So to me, I advise the investors to pay attention to the sectoral indices rather than the all-share indices because we have the heavy elephant in that index. We have about 4 companies that control 60%. Whenever they lost anything, it affects the entire market. Not the market have lost. I expect the market to continue gaining because of the expectation of the final result, audited result, especially by the financial sector. Remember, most of the financial sector declare their result by the month of February or toward the end of it, and they will declare dividend. And most of the investors will be willing and ready to take their dividend because we have a market where the dividend yield is very, very higher than the emerging market, higher than the frontier market.
Oh, thank you so much for that. Well, we'll see. Let's pick on Guinness Nigeria now. We saw that Guinness rose, the share price rose significantly during the week. I think it gained about 11 naira 95 kobo. It opened the week at 48 naira 55 kobo to close at 16 naira 50 kobo. Why these astronomical movements? What's pushing investors to buy Guinness at this moment? And would it be sustained?
Well, if you remember, this is a stock that in the past we traded it as high as 189 naira. But because of the restructuring and the losses they declare, it traded as low as 14 naira last year. Since then, it started moving forward. We have seen their half-year result, and their half-year result fantastic with an earning per share of 4 naira. That means technically by the end of the year they can declare 8 naira. If this company earn 8 naira at the end of the year, they can pay 6 or 7 naira as a dividend. So what do you expect a stock that can pay you 7 naira? That's what it make it movement. And I see it that just at the beginning. This is a stock that we are hoping by the end of this year may start trading at least in 100 digit. That is 100 naira and above, because it can get there.
Also, are we saying that investors, is it going to be, are they bringing out new products? What's going to make this growth? What's going to push for this growth?
No, what pushes the growth is the turnover. You see them in their turnover, they have a double-digit growth. In their profit before tax, profit after tax, they have a double-digit growth. It is technically qualified for any serious investors to invest for those companies that have double-digit growth. So that's what push it. There will be more demand of this. Remember, majority of the holder of this stock, they hold it far ahead the current price. So even trading at the current price, except those who take position at the lower price, they are not likely going to sell at again. So therefore, I see it going more higher.
Okay, so we move over to the unlisted market now. Let's talk a bit about that space. The NASD, that's the index in the NG, I mean the NASD itself. It's dropped now to about 8 naira. What's really happening in that space? Why are investors not really buying as much as they should? We saw that the mover for the week there was Friesland Wamco, Campina Wamco. That was the mover for the week.
You see, these are the major players there, because when you are looking at the NSD, you look at the liquid stock. CSCS is one of the liquid stock. Yes, Wamco is the second one. The NSD is just strategic staking. Remember, by November last year, it traded as high as 27 naira. For a stock that has never paid dividend, from 2 naira to 27 naira, it shows you that somebody is taking position. And I remember that more than 10% of the shares was traded last year. So having taken the position, maybe they have taken the desired quantity, and now the price started coming. It opened by the beginning of the year around 19 naira. Today, we are talking of less than 9 naira. It may go further down, but if another strategic investor come back to it, it will go, because the shares are scarce. You are talking of just about 500 million shares. So, and majority of it are the directors of the company that control about 80% of it. So you can say that about 60% of the shares are not tradable. So those that trading are those that have 1 to 2 million, and by the time the stakeholder or the takeover position mop those one, the price will go up.
So the stocks that are not tradable or that are not really traded, what do you think? What are the solutions? What do you
Well,
think could
the
happen
solution
there?
it is, we have said it for numbers of time, there is the need for market maker of NSD. If we got the market maker of NSD and bring more liquidity, there will be more activities. A lot of the investors do not even know that NGX was traded in NSD before coming to the NGX. And it traded as high as 31 naira when it was in NGX. Today it's trading 27. People are shouting it has gone high. They have forgotten that it's traded as high as 31 in NSD. So we need liquidity and we need more market maker so that provide liquidity, and we want to see more activities in that market.
What is your outlook for the coming week?
Well, I expect the market to rebound back. You know, it closed marginally. I expect to rebound back for reason that most of our financial institutions, which constitute about 60% of our trading volume, will declare their audited account and possibly a dividend. Why didn't you hold for a dividend? A company that will give you 11% dividend yield, 12% dividend yield, you earn it by March, April, they will have paid their dividend. And most of them investors will like to take position. So you will see more volumes in the banking sector, and this is likely to continue next week. But majority of the institutional investors will prepare to hold it for their dividend because their dividend is free from tax. They don't pay withholding tax like me and you.
So what stocks do you think are likely to rise? What are the stocks you're looking at here?
If you look at it, the top gainers are the penny stock. The penny stock will continue to shine. The simple reason is that majority of the retail investors, they are concerned with the volume. So they want to invest heavily in the stock that are low price stock. So we see it going in RT Briscoe, and I will expect it to still go up for the next week. Other stock, the Guinness is there, but it can go. We still expect more movement in the Airtel because when you look at it, you will see that it has the potential of going much higher. Okay, I see it as a stock for the week.
Speaking of Airtel now, that we have observed that certain stocks such as Airtel Africa, Seplat, Energies, and ETI, they recorded substantial gains, you know, from beginning of the year to date. As in, what do you think, even higher than the all-share index, you know? So what can you attribute this rise to?
I think gradually the investors have started realizing that it's a difference from local listing and dual listing. These stock you mentioned, they all had dual listing. And because of the dual listing, it gives room for arbitrage. Take, for instance, Airtel Africa. Airtel Africa today is trading 1,000 plus in Nigeria. Do you know it's trading about 144 sterling pound in London? And you can buy it here and move to the London and trade it there. You can couple it. And the same thing with the ETI. ETI from January to date gained about 42%. And when you look at it, why? Because this is a dual listing stock. It's listed in the Nigerian exchange, Ghana exchange, and Cote d'Ivoire. And you can trade it from one place to another, the same ETI. The same thing with Seplat. Seplat has a dual listing both in UK and in London Stock Exchange and Nigerian Exchange. Today, it gained more than 33%.
So you're saying that if I buy a stock that has a dual listing, I can buy here and go to London, probably Airtel Africa, which is just listed in
they are the same.
I can trade it there as well.
Yes, you can trade it there.
Seamlessly, without any obstruction.
The exchange allowed that one, the CSS allowed that. All the stock that have dual listing, they have the same characters both here and there. And at times, most of the investors take arbitrage. Arbitrage is to buy where it is low and to go where it is high so that you get best of it. And don't forget, this stock they pay in dollars. And you know with the devaluation of Naira, even if they give you 10 cents, you are talking of over 50 Naira. So which of the stock that give you 50 Naira today, apart from the nesting? So you see that these are some of the reasons that the investors want to capitalize onto it. And I expect this stock to go much higher than where they are today.
Okay, so before we just go on the break, I just want to talk about MTN. We've just seen that MTN has credited the accounts, you know, of these retail investors that bought their offer, their share offer recently. What does this mean for the markets, really?
I
As
think,
in,
I think, I think the
and you know, it
MTN
came in
want,
earlier than
yes,
they actually
yes,
planned. They wanted
yes.
to pay it
I think
by February 18, but we've gotten it earlier than that. So what does
MTN,
this mean?
we held MTN. They really love the retail investors, and they are for that. Because all the retail investors get 100% of their allotment. Not only that one, they even promised me a dash, because that is not a bonus. For anybody that decided to hold MTN for 1 year, he is going to get 5% additional. That is to a maximum of 250 units. And this we have never experienced this in the history of the capital market, except with the coming of the MTN. So MTN want to be more closer and friendly with the retail investors. They decided by last week to credit all the retail investors. Remember, most of the retail investors, they are more in numbers and they can have issues. So that those that have issue, they can easily rectify it on or before even the actual releasing to the institutional investors. And don't forget that the institutional investors got 72%. So what it means, the bulk of the share will be released thereafter. But trust the retail investors. As soon as they got their shares, they started selling. And this is what make even the price from 200 naira to close at 197. I advise the investors to hold their shares.
Oh, that's a good one, and that's a good development for the market anyway. But we'll take a quick break right now, and when we come back, we'll continue the conversation, and that's in the moment. Do stay with us. This is Capital Markets. Welcome back. If you're just joining us, this is Capital Market live on Channels Television. During the week, the Bankers Committee held its first meeting for the year in Abuja, the nation's capital. The Central Bank Governor of Nigeria, at the end of the meeting, said the Apex Bank will stop the sale of foreign exchange to banks by the end of the year. Let's take a quick listen.
For us to earn export earnings, we have to depend on what is the price of crude and what is the quantity of crude that we are allowed to export. Let us not forget that before we found oil, Nigeria was meeting its FX obligations to fund import items, right, from non-oil export sources. Here I'm talking about whether it is cocoa, whether it is groundnut, whether it is palm oil, whether it is rubber, and the likes. Banks do not go to central bank for dollars. Banks naturally just find proceeds and they fund it to fund their import obligation. But when we found oil, we decided that because there's no more non-oil proceeds, we have to go to central bank or NNPC to buy dollar to fund import obligation. And that took us to where we are today.
That was a CBN Governor, Mr. Godwin Emefiele, speaking at the end of the Bankers Committee meeting held on Thursday in Abuja. Now back to you, Mr. Garba. The Central Bank Governor has just said in the last minute meeting on Thursday that they will stop the sale of Forex to banks by the end of the year. What do you make of this? What are the implications to equities?
Well,
direct implications.
Actually, this is a new phenomena that we have never experienced in the history of this country, because all along, most of the banks look for their license in order to be able to source for the foreign exchange because of the huge discount from the official rate and the parallel market. Now that they decided to ban the biridi change, people are shouting, why ban the biridi change? They now take it extra length to the banks. And I say it's a welcome development. Welcome development in the sense that the Bureau de Change have to sit up now to start looking for their dollar for survival. If the bank will not get allocation from the CBN, who else? That is one. Two, remember, Nigeria in diaspora remit not less than $20 billion yearly. These dollars are not remitted into CBN. So banks that have this asset will now open their window and make sure they capitalize in this. And therefore, now they added to it that even the allocation from the central bank will stop by the end of the year. It is a welcome development in the sense that banks have incentives attached to this policy. And this incentive to the manufacturers, to the exporters, and services industry. What it means that everybody will raise up to the challenge. And it's good that they give early notice. Because if you want to benefit from this, for a serious bank are expected to identify those companies that export for foreign exchange and start facilitating their facilities, machineries, whatever it will take them to go into that, they should do that. But for the capital market, it's a welcome development. Welcome development in the sense that foreign direct investment is one of the sources of our foreign exchange. So by the time you now say that it's free for all, you will see more dollars coming into the capital market because they are no longer going to trade them at the official rate. Is that what retard them? And if this is open, I can assure you that capital market will benefit from this and will have more liquid and will have more activities into the market.
Well, from what we've known from history, we know this is not a new development. This was what happened before oil was discovered. Banks were not going to the NMPC or CBN for dollars. But right now, do you think it's going to, because you're saying they should source their dollars from the exporters, that's their customers. So with the, with the restrictions we have with our ports and bureaucracy, administrative, do you think this is going to work? I mean,
it is going to work. I will tell you it's going to work. And this did not happen because you are talking of before the oil discovery. Before the oil discovery, we are not born. You are talking of over 60 years. So since the government, CBN, started allocating dollars to the banks, they were all aiming to get allocation because there is margin. Now they say not to it. And the beauty of it, there is incentives attached to the private investors. Investors take advantage of the incentives. Today, we are no longer importing cement. Why? Because of the incentive attached to cement manufacturing. These foreign exchange, I assure you, they say RT, return to $200 billion. We can achieve that one. Others countries, they have achieved it. Nothing stopped Nigeria achieving it. And I can assure you, it is a welcome development. We want it in the capital market because it will allow the foreign investors and the Nigerian diaspora to release their dollar, to sell it at the parallel market, get their money and buy the stock. And therefore, you will see boom and volume transactions because the coming of the foreign investors into the capital market increase our volume and liquidity. And it is a welcome development. That is why I'm not surprised when Julius Berger decided to go into cashew nut agricultural sector. It's want to capitalize on these incentives.
Yes, but do you think it's not overly ambitious? Because the timeline given for this is, do you think we can achieve this within the timeline given? If we're looking at possibly by the end of the year, they're going to stop. Do you think we can make up enough?
We can make it. We have mentioned this in January.
And it's not going to put pressure on the foreign exchange, the foreign exchange.
Look,
it's not going to put pressure on it?
What it means, to me, what I understand this technically is the issue of dual exchange rate will be over. Because when you allow the market to dictate, you will see more dollars coming into Nigeria. A lot of Nigerians keep their money in hard currency just to avoid inflation and devaluation of Naira. If this is open, you will see more growth. Go to those countries that have this single exchange rate. Take Egypt, take South Africa. You see more foreign exchanges flowing into those countries, and they are stable. Even Dubai, take for instance. Emirates, they are getting a lot of dollars because they don't have dual exchange rate. This will eliminate dual exchange rate, and it is a welcome development. And 9 months or 12 months notice is enough. Most of our export processing, we can generate them in less than 6 months. You are talking of the ginger, you are talking of the cashew, you are talking of cocoa. All these will be processed, add value, and export.
So do you think Nigeria's exports are competitive enough globally at the moment to be able to meet these demands?
We are not, but we have to start somewhere. And this is the beginning. And they have let people to know much earlier. We are talking of December 2022 ending. These 10 months is good enough for a serious banks, a serious financial institution, a serious investors to go into it. I assure you, you will see more redirecting into that. And I believe that because they are looking at so many things coming to Nigeria, don't forget that the refinery is expected to start production before the end of this year. So if we don't import oil, we don't need to spend much dollar to export. So therefore, there will be enough for the bank to take care of other needs.
So talking of Julius Berger, just a quick one before we go. Julius Berger is going to the agro sector right now. Do you think you see investors going to push into that stock at the moment because they're diversifying at the moment, expanding to the agro, especially for cashew, processing cashew. Do you think it's going to?
I think they have done their homework. One thing with the Oyombo, they never take chance. Look, cashew is one of the export that Nigerian good into. If you mention 5 agricultural products that we export, cashew is one of them. Do you know that in Nigeria we process less than 5% of it? They are bringing a factory that will process it. How many value added to they will add to it? I assure you, by the time they go into it, everybody knows that Julius Berger is a serious construction company. If they decided to go into agriculture, just take it for granted. It's just a matter of time. Chinese are already there in the country into cashew. So Julius Berger have seen it. European is one of the areas that we export our cashew nut into. And I can assure you, with German backing, if Julius Berger go into it, the sky will be the limit. And the rest of the Nigerian may likely going to join later.
Mr. Garba, it's quite sad to note that Nigeria's exports are quite undervalued, and you're just speaking about the potential that that could have. But this is where we're going to leave it on Capital Market today. Mr. Garba is the Chief Executive Officer of APT Securities Limited. Thank you so much for joining us on the program.
Thank you for having me.
Thank you so much. And that's a wrap on Capital Market for today. I'm Will Ebong. Thanks for watching, and do stay safe.